Hi, Face Warriors. Let's have a great week. Who's up for having maybe their best week ever? Give me a why. Here's my why. Okay. If you don't believe, it won't happen. So believe it. There's, I like that, Nitish. There's someone who believes. All right. So I have a few things to talk about. Greg is going to join us. No guest interview today. Maybe Greg will be our special guest, even though he's part of the team. Starting off with USD CAD. All right, traders. USD CAD has had, since the breakdown, one close above it. Here's one touch. Here's another touch. If this trade is going to work, in my opinion, it has to get going because it's giving people a little bit too much time. I think it has to get going from today, no later than tomorrow. And your first warning signal of a false breakout is going to be closes, not intraday, but closes back above 28.10, 28.20. I'd abandon that idea. It should work because, in my view, it's possible the dollar peaked on Friday with the NFP. Okay, this was the initial break from the NFP. You know, it tried to bounce a little bit. The only thing that bothers me is being led by the pound instead of the euro, with cable up 34 and euro only up 5. So maybe it makes another rally attempt, but in my view this week, I think you have to try the short side of the dollar. April's a negative seasonal for it. Adam Button told us that. Some of my intelligence gathering, ForexAnalytix isn't going to be bullish a dollar until it closes over 92. Well, right now I think it is going to have difficulty closing over the double top here we had on Friday, in my view. Everyone with my analysis? You don't have to agree with me when I'm giving you what I think and what I see. It's just to give you a little background as a sounding board to your own thoughts. Your own thoughts are king, but just part of your intelligence gathering process. Sometimes avoiding, in fact, always avoiding a bad trade is just as important or more important than being in a good one. It doesn't show up in your account balance, but I guarantee you it's a major thing to avoid bad trades. Okay? So just another couple thoughts here that I want to share before I bring Blake on is Aussie Kiwi is now starting to set up down here. Here's your wedge, your potential 3 drive to a bottom formation. You have pretty good divergence here. Here's 1, 2, 3, and this was my shaky hands trying to draw the line on Saturday. You still need some positive action. You know, it is possible we get a throw over, but I'm liking these levels within 30, 40 pips of where we are now. You're getting that divergence here. The only caveat being, and I know it's off of Grega's work, is Grega was looking for one more low in Aussie, which still hasn't happened. It's under 34. It still could. So that may tell you to be just a little patient, or maybe you only have partial positions on for Aussie Kiwi, but I think that we could get a turn this week. Let's look at the 2-week off number and where it would have to close to give us a weekly reversal on Aussie Kiwi. It's going to come in at 106.02, which is pretty doable. So monitoring that, S&P, after, you know, getting trounced. Here we have the daily under Friday's low. Look out, but perhaps we get a recovery here. You know, I think that in these ranges, you have to sell the rips and buy the dips until it resolves itself. So, you know, it's still possible that we get a nice rally here. I still think there's a chance for one more drive up in NASDAQ, which has really been the weakness as of last week as they take the air out of the FANG stocks, and President Trump goes on attack against Amazon and Bezos because he owns the Washington Post. But Right here, you know, I don't know what to do, but I certainly would know what to do up at 7,300 at a new high. So everyone with me on what I'm thinking here? I'm not sure. I saw Steve on Skype, but I know it's Blake's turn to take over here. And interested in what Blake's thinking. Blake, do you think that the dollar may have peaked on Friday with the NFP?
You know, I don't know, Dale. This is I'm gonna say that in FX we're kind of like in no man's land at this moment. It's
Purgatory.
Like purgatory. It's kind of like trading purgatory. Yeah, that's one way to look at it. You know, I'm not really 100. Well, I mean, you're never 100% sure. I'm just not. I'm really unsure of what to do at this moment in time with the market. The market is very it's kind of challenging because we're kind of here. Let me go ahead and I'll take over here.
Okay,
give me a second.
All right, buddy. Always enjoy seeing your technical work.
Well, you know, I wish I had more to show today because, you know, this is like one of those situations where I'm really unsure what to do. You know, the euro dollar was, you know, trying to break lower on Friday, you know, and then following the NFP, the euro dollar reversed and it reversed higher, and the dollar pulled back. And this, just so if I can go over to the dollar index, and I know I talked a lot about this during the week ahead video. You know, the dollar index was making its way higher, and we came right up into this, you know, into this trend line, real close to this multi-month trend line, and we pulled back, and that dollar gave us a, you know, basically a reversal candle, and I said, okay, well, you know, I was long the dollar, I was actually short the euro, and I took my loss, and I moved along, and I'm like, okay, you know, I'm just going to go ahead and get out, and looks like the dollar, you know, is going to reject here. But at the same time, you know, I'm really not 100% confident that the dollar is ready to head lower, at least not against the euro. So for me, you know, in order for me to be bullish the euro, or bullish the dollar and bearish the euro, I'm going to have to see the euro dollar take out these lows, and that's, it seems like that's asking a lot at this moment. You know, don't forget that we have this trend line that really held us. You know, we made a little false break below, you know, Thursday, Friday. So we really have to get below this 122.15, which isn't that far away, Dale. It's not like, you know, it's not like we bounced and where we went 300 pips, and, you know, that tells me, oh, you know, the dollar is definitely reversing. I don't necessarily agree with that. Now, I do look at, you know, there's another way to look at the dollars, through the dollar yen, and the dollar yen, any which way you slice it, you know, while the dollar yen is below 108, it's hard for me to be bullish the dollar yen. You know, so that's one thing that, you know, makes me second guess, you know, how I'm feeling about the dollar just in general, is knowing where the dollar yen's at. But the dollar yen is
for you, Blake. I have a question for you. You know, I prefer pure dollar bearish moves. To me, are always better when the euro is outperforming cable, and that's not what's happening here. Do you feel the same way? And just like pure bearish, bullish dollar moves are when euro is weaker than cable, and cable seems to be leading this dollar sell-off.
Not necessarily. I mean, because I think a lot has to do with the euro pound. I mean, if the euro pound, you know, is cracking like this, and when I say cracking, I'm not saying cracking as far as like the Brits would say, you know, like, oh, it's a cracking good time. Not that. No, if we're cracking below some key support in the euro pound, then the pound's going to naturally, you know, outperform the euro. So, you know, when we're range bound, I guess you can make that assumption, or or pay a little closer attention to that. Wow, stocks are actually coming under a little bit of pressure right now. Hold on, let's go over to the S&P here.
Yeah,
here's the S&P. Okay, we're just, I say that we're coming under a little bit of pressure, and I'm getting excited about it. It's because we're just not seeing a whole lot of moves right now. So this is kind of exciting to me. It's like, ooh, look, you know, we got a couple of point move in the S&P. But you know, going back to your question, it's not a. I've seen the pound lead. I've seen the euro lead. So it's not, you know, for me, it's not a necessity. It's not something that tells me that.
okay.
However, when I look at like the Swedish krona and the US dollar Canadian, sometimes those tend to give me a little bit more clues on what the dollar is doing. However, the dollar Canadian right now is you know, plagued by NAFTA news, so I kind of have to ignore what the dollar Canadian is doing and try not to get super excited about, you know, you know, it's part in how I feel about overall dollar bullishness or bearishness at this point, because, you know, so much is surrounding the NAFTA negotiations, and it's on, it's off, it's, you know, it's making progress, it's not. So you know, anyway, but you know, as far as the dollar goes, there are a lot of mixed signals. I mean, look at the euro is pushing into new highs right now. I mean, the euro is actually, you know, pushing right into new highs, and I guess the pound is kind of moving higher too. The Aussie is, you know, trying to bounce here. The Kiwi's been pretty resilient. I'm surprised the Kiwi has been as strong as it has been, and you can see that in the Aussie New Zealand, which I am long, and I'm long and underwater, and I know you talked about it too. Were you saying this is a 3 drive?
Yeah, yeah. You have
So
1, 2, 3.
But what about this one right here? Or are you talking about a main drive, like 1, 2? This is the 3rd drive?
Yeah.
Okay. So why does it, what makes this a 3 drive? I'm just asking you a question.
Right. The first low, move your cursor to the left at the first low.
This one right here?
Yeah, you could use that, or you could go further to, I think it's like the 6th of April, for it to be tighter, that low on the 6th of April. No, you're in March. Move to your right. Move to your right. Keep going. No, the one next to it. Could be drive 1. The one next to that, to the left, is 1.
Oh, 1, okay.
1, okay, that was a confirmed low. Then go to your next low. That was a divergent low. And here's 3, and it's still diverging. And
got it,
kind
okay.
of a wedge, getting a throw over. So what I teach people is when you have a throw over under one of these falling wedges, if you like to hear the ice crack, you put it on a partial position here, but back inside the formation is a signal. Sometimes you don't have throw over. Yeah.
Right, so if it gets back over
that red line. Yeah.
Okay, yeah, like somewhere up here. I got it, okay. But, you know,
yeah.
Got it. And you know, and going, you know, to looking at the Kiwi, like I don't understand why the Kiwi is so outperforming the Aussie, because you know the Kiwi is, in my opinion, just as vulnerable to, you know, a slowdown in China that the Australian economy is. So I don't understand why the Kiwi is outperforming the Aussie at this point, but it is. And that's one thing that we you know, should note, is the Kiwi is outperforming. Like I said, I don't understand the reasons why.
It'll change this week, Blake. That's my bet.
Yeah. Okay. Yeah. Well, you know,
it even looks better on the 4-hour. Tom Lano's pointed it out that I was showing the 4-hour. So now you have even more glaring divergence. It's your second divergence here. See that?
Right, right. Yeah, this is the first divergence, this is the second divergence. Yeah, I mean, I see it and I understand, and that's one of the reasons why I'm playing to the long side. And also the multi-year trend line is coming into play. But, we could also get all the way down to 104.72 before it's all over, is what I think,
big deal. Yeah, in the big picture, big deal,
Yeah, it's possible. It's possible. It's just one of those things that you gotta take into account. Now, as far as the going back to the dollar, I'm really not super convinced about the dollar in either direction, really. I look at the U.S. dollar Swedish krona, which tends to be a leader of the dollar. One of those currencies that I tend to pay attention to. You can see it's coming under a little bit of pressure after hitting an 88% retracement. We had a little bit of an ascending wedge there that broke lower, and so that that's telling me, hey, maybe the dollar is going to stay weak, but at the same time it was because it was outperforming on the way up. All right, again, going to the dollar index, in order for me to be bullish, I really have to see a move above 90, 75, 91. And until that happens, it's hard for me to look at the dollar and get really bullish here. Then a lot of people would ask me, at the same time, does that make the euro a good long? And I mean, you can play the euro to the long side. I'm not, but you can play the euro to the long side as long as we stay above this 122 10 or 20 level. Then you've got manageable risk. It's just like the dollar short. You can say, okay, well, since we know where we're wrong in the dollar index, you can play the dollar to the short side here if you want, and just if we get above 90.75, then it's time to be long. But again, I'm not really thoroughly convinced that the dollar is ready to start a new leg lower either. I know positioning is still pretty skewed out there, and it's possible that it's still possible that the dollar could squeeze higher. Now, one of the things I guess I'd like to talk about today is the stock market. The stock market is very choppy at this moment. I have to say though, Dale, that the chop that we're seeing in the stock market, it's got to have bulls a little worried. I know we're up this morning, and I know Dow futures are up 139 points today, currently, pre-market, but we're really, for the most part, trading pretty heavy in the stock market. And, with the S&P not getting a sizable bounce, not making higher highs on a daily basis, it would make me a little nervous if I was long equities. I'm not long equities. I'm just saying if I was. But really, this support zone is what really needs to crack in order for the stock market to really feel some pressure. And as I pointed out, let me see if I can get this really quick. Just let me pause my screen. I'm going to grab my DSI really quick from Friday. I have to find it. Oh, there it is. Let me get a picture of it. Okay. All right, you guys should be able to let me know when you can see the DSI. Can you see that? Yeah, you guys should be able to see it now. Okay, so when I'm looking at the DSI, yeah, you can probably see it right now. The DSI is, you can see the S&P right here. Go to blue. The DSI is trading 35. You know what? I guess when I saw 22, I was mobile when I looked at it. It was the euro dollar, which is not the euro dollar FX. So, but here's the S&P is at 35. DSI reading is fairly low, and so if we hit a new low in the S&P, by the time the S&P breaks down, if it does, and I should say if, the DSI readings are going to be pretty low by the time we get down here. So I think that any type of downside in the S&P is probably going to be fairly limited, at least in the in the near term. We could fall and bounce, and then then try to regroup and figure out where we're going to go from there. But I would be I am paying pretty close attention to the stock market, because obviously the stock market is having a lot of influence on what's happening in the currency market. As stocks strengthen or weaken, it is having an effect. There is something that is happening tonight that that is pretty important. Hold on really quick. Let me grab my notes here. Okay, so tonight, China's Premier Xi is going to be talking about they're going to be talking about the China's Xi is going to have, and I don't even know if I'm pronouncing his name right. Xi is going to have a press conference this evening, and this evening it's going to be between 9:30 and 11:30 Eastern. Okay, so it's basically
addressing the possible trade.
Well, yeah, possibly. Yeah, we're not sure what the extent of it is. So it's kind of an important deal to be in front of your computers this evening, because they could really comment on, and I'm assuming that's what it's going to be on. It's going to be there's going to be comments regarding the tensions between the U.S. and China. So this is going to be an important press conference. It is happening in about 13 hours from now, roughly. Okay, so that's something that I'm going to be paying pretty close attention to tonight. So tonight I'm going to be, after I get back from my son's practice, I'm going to be, listening in.
That's my bedtime.
I'll be about 6:30 our time.
Oh, okay.
6:30 our time. Well, yeah, which 9:30 Eastern. That's you're not quite going to bed. It's getting close though, and it's close to mine too. So,
oh man.
Yeah. Anyway, but that's something that I'll be listening to for sure. Now, I don't want to talk too much of these these yen pairs, but I'm going to talk a little bit about them today. At least the dollar yen. So the dollar yen, we came up to the bottom of this resistance zone. You can see here. Let me go ahead and tighten that up a little bit. This is a pretty strong resistance zone, and we failed up here. So what I'm looking for today is I'm going to see if we can break back below like this 106.60 level, and if we do, then I'm going to start looking at all these yen pairs as possibly short trades. But I'd like to see the stock market be weak at the same time, and if it's not, then I might reconsider. But you'll notice that the dollar index, the dollar yen, we bounced overnight. We stopped at a 618 retracement at 107.20. We stopped there in reverse, so that is considering we stopped at the 618, it definitely got my attention. So again, I'll be paying close attention if we break back down towards like 106.70, 106.60. Down here, I'm really going to start paying close attention to it, because if it does break down and stocks are showing some weakness, then I will start looking at all these other yen pairs as possible shorts. I mean, I know the euro yen's right up against channel resistance right now. I mean, we're knocking our head right up against there, right into the resistance zone. You know, pound yen's trying to break higher. Aussie yen, you know, is trading a little, you know, off kilter, I guess. Kiwi yen's coming down a little bit, and the Canadian yen, you know, we were looking for a little bit of a rally and reversal, and we hit the 127% extension basically, and you know, we've come back down a little bit. So, you know, just what I'm paying attention to as far as the yen pairs go, just in the event that the stock market shows some weakness, and not saying that we're gonna get it. It's just, you know, it is possible. Now, I'm not sure if Steve's going to be here today. I know Stelios is here. Stelios, are you around?
I am here. Hello. Good morning, everybody.
Hey, good morning, Stel. How's it going?
I'm very well. It's a holiday here in Greece, but we're here, so all good.
Isn't Greek Easter?
Yeah.
Wasn't it yesterday?
It was, yeah, but the day after is always a holiday. So the day after the Sunday.
Oh, okay, got it. All right. So well, I appreciate you being here on holiday. Do you know if Steve's going to be here as well?
Steve is going to be traveling. He's gone on a boat in about half an hour, so he's not going to be on today's webinar. So I'm here to fill in, and I think we've got Greg later as well. So.
Okay, yeah. So we're going to be at full capacity tomorrow. We don't have any news. Well, I guess we have. No, we don't have any news this morning. No. The Bank of Canada's Business Outlook Survey comes in a little bit later, but I'll stick around with you for a few more minutes. How do you feel about the markets? Because right now I'm looking around and I'm really unsure of what I should be doing, and I don't like that feeling of not, you know, just not. I don't want to say not knowing, but just not. I just don't feel like I have a good handle on any specific direction. Is there anything that's popping out for you as far as you know, any type of setups or any thoughts or ideas?
Yeah, I agree with you. You know, it's beyond doubt that right now the main driver of pretty much, not every market, but most markets, is the dollar. And the dollar is stuck between a range. I mean, if our listeners, if you're getting our weekly newsletter, which is free, you'll get this, which we've talked about this for a few weeks now. It's stuck in a range. The DXY is between, you know, 88.5 and 92. It has to break either side of that for it to be considered a proper move. So now,
Stella, I hear Dale the interrupter. Listen, I know that both of us were looking for 91.5 or 92.
Yep.
And to me, it looks like Friday may have aborted that scenario. I'm curious, technically, what would change your mind that we're not going to 92 and we're going down instead first?
Well, for me, it will have to be some kind of a proper negative development when it comes to the Trump administration's trade policy. So because this is really what's happening.
Okay,
well that's the thing.
Yeah, but technically, is there a technical area, or does it have to be driven by fundamentals?
I know. Now I gotta stop you here real quick. And why do you say 92? I mean, I'm looking at 91 as being like really my line in the sand. It's like as long as we trade below 91. But if we get above 91, things change technically for me for the dollar. Why do you say 92, Stelios?
Well, let me show you. Hold on. Let me take the screen for a second, because I look at. You know how I am. I look at longer term. Show my screen. Longer term charts, and this is the chart I've been looking at for months, and I've shown this in this webinar many times before. And I've drawn this line some months ago, and I think there probably will be a reason for the dollar to rally. You know, Trump might give us something. I don't know what's going to happen, but it feels like it's going to test this zone. And look at this zone, how far back it goes. Goes all the way back to 99. So I really, really like it. And it seems to be an area where there's always movement, that there's always reaction. So and this zone starts from below 92. It's something like 91.7. You know, so 91.5 to 93 or something like that. That's my area where I think we're going to see something. And the nice thing is that the dollar obviously affects lots of instruments, and dollar-denominated instruments like oil and precious metals. And my view in those agrees with what I'm seeing in the dollar. For example, let me have a look at. So I think that we probably going to get a reason from Trump. I don't know what's going to happen, but we're going to get a reason to get back up to like 91.5, 92, and then I think it's going to free fall. But the interesting thing is, if we look at oil, for example. Oops, wrong chart here. There we go. I look at the weekly chart on oil usually. I think we're going to get a little drop towards 59.60, and then up it goes. And that kind of goes in line with what I think with the dollar is going to happen, because as the dollar strengthens, oil tends to suffer. So that's that's another view, another thing I look at, which kind of matches the dollar. And the other thing is precious metals, which again, I look at silver in particular. I think we're probably going to drop a little bit towards the bottom end of this zone, which, by the way, silver has got some really nice zones, which has been following quite well over the last few years. So I think maybe, as the dollar strengthens a little bit, we'll go towards the bottom end of this zone, which is what, 15.5, something like that. So, and then it goes higher. So all that ties in with what my bias is. So that's, to answer your question, Blake, that's my view on the, let me go back to this. Unfortunately, I look at the dollar, which affects so many instruments, and I'm kind of torn right now. I don't have a clear view on it in the very short term. It's moving, it's moving along those levels. Sorry, pardon.
And I've got three, so I'm with you. Now is regarding the dollar, and we talked about this on Friday. It's not like the macro backdrop has changed at all.
No, nothing's changed. Obviously, like I said before, the only thing that's changed is these tensions between Trump and China and the NAFTA. So the U.S. government is fighting quite a few battles right now. But apart from this aspect, there's nothing that has changed in the background. Everything is the same. The Fed is going to keep going unless we have a huge sell-off in equities, where we know how the Fed reacts to that. So the Fed's going to hike another 2 times this year, maybe another couple of times next year. I don't remember what the market's pricing in, but something like that. So really, it's all eyes on Trump and what he's going to do.
Right.
So that's my problem right now. The dollar is going up and down a little bit. It's moving here and there, but it's not doing anything decisive yet. And it's the same with equities. They're rallying 2% one day or 1.5%. They're selling off 2% the other day. It's very choppy, but there's no clear direction just yet.
Yeah, this looks like a weaker rally to me, guys, than the one that we had before we broke to the 88 level. That at least had a little lift. All we've done is go sideways. Maybe we have to clean out the dollar bulls under 88.5 first before we get the rally that Stelios is looking for. That's my guess.
Could be.
Yeah, maybe.
It's hard to say, but like Blake has said so many times, and you said, Dale, as well, the more the market stays in a sideways manner, the longer it does that, the more probable it is that it's going to resume the trend, and the trend is down for the dollar. So I think we're going to get a small bounce. How small? I don't know. I think we might get to that zone again, but I'm not convinced anymore. It's difficult. It's really difficult.
Well, Dale talked a lot about how the pound was kind of leading the dollar weakness. And do you have any specific views about the cable right now? Because the cable seems fine and very, very chop city right now.
Yeah, I am still, hold on, let me get that to the right time frame. There we go. Cable is very interesting. I am still a bull for the pound against pretty much all currencies. I think the progress that we've seen over the past few months in terms of the Brexit negotiations, of course, it was never going to be done and dusted within a day or a week or a month. but we've seen some constructive progress from both sides. And I think this is going to be a good solution. I think the Bank of England is probably going to hike faster than we think because of inflation. And so I am a bull for the pound. Now, for cable in particular, as you can see, we're still on this channel. We might test the bottom end of it as the dollar strengthens. If it strengthens, like we said, it might do. But overall, I'm still bullish the pound. So I'll be looking for opportunities to get back long on the pound. I'm not long the pound against the dollar right now, but I'll be looking for opportunities somewhere around 38 if we get there. I think Steve also mentioned that as long as it's above 38 or 38 and a half or something like that, he's bullish, and I agree with that. So I am bullish to the cable, but not just yet.
Got it. It's like you know, looking at the last, you know, 3 or 4 candles with the cable, it's on a weekly basis. It's also, or that's a monthly chart. That's still, it's still showing you that we're just covering for Steve Stelios.
No problem, Blake. Enjoy. Have a good day.
All right, you too. Bye-bye.
Good day. Good day, Blake.
Thanks, Dale.
So,
thank you. You too.
Another chart that I like looking at is Bitcoin. And I've been tweeting about this. I've been talking about this on the chat room. It's actually very surprising that it's been trading quite technically in the past few weeks. So I've got this downward channel, which has been pretty strong. Actually, the top almost coincides with the introduction of the futures on Bitcoin on CME, which is interesting. And if you look at this trend line here, it's trying to make up its mind if it's going to go above or below. My guess is it's probably going to keep going lower, but it's very interesting that it's actually been hugging that trend line for quite some time now. And given Bitcoin's volatility, daily volatility, which hasn't decreased recently, but still it's quite volatile, this is as close to, you know, hugging the trend line as it gets for Bitcoin. So it's another interesting chart, and you know, if you put a gun to my head, I'll probably sell it here, because it's, you see the last candle, it just actually touched the trend line and went lower again. So I think I'll be probably selling that. I haven't traded Bitcoin at all. I'm a bit scared of it, but that's what I think it's going to go. And then you got the support at like the mid 5,000s, and then who knows if it keeps going. Right. So what else can we have a look at?
How about oil? Well, you're an oil bull, so you were thinking that oil correction isn't completed. We could work lower instead of holding right in here. I thought so too, but if the dollar is going to weaken from here, maybe that was it in crude. But I thought we could even see 56. So you're thinking one more test of 60. And
I think so. I think so.
You've been talking about for a long time. 61.8 back.
Remember the beginning of 2017, right? When I was talking about year-end $60 oil, and everybody thought that was crazy. And it happened like a week before the year ended, so that was fun.
Markets always look the worst at the bottom and the best at the top.
Absolutely, absolutely. And you know, the interesting thing is, I talk to a lot of people, I follow a lot of people, and it feels like everybody looks to sell rallies in oil still. And so that tells me that you know, we might correct a little bit, but the way forward is still higher, in my opinion. And there's a lot happening in this world, you know, and Syria, and you know, all these troubles, and you know that oil is involved in a lot of these conflicts. And you know, if it wasn't something very valuable, all this wouldn't be happening. And it's very unfortunate that these things are happening. But you know, it's a finite resource. It's still used heavily. I think 50, 100 years from now, I'm not going to be alive then, but 50, 100 years from now, oil will become so scarce that it's probably not going to be used anymore. So oil value will probably eventually fall to zero, but this is a long time from now, and until then, there's still going to be demand for it. There's still a lot of demand for oil, and it's driving all the major economies. So I still think we're going to have another nice leg higher, and then we see what happens. Let's see, what else? Do we have any questions to answer? And I think Greg is going to be joining at some point. He said he's going to be joining at 45 minutes past or something like that. So let's have a look at. Our friend Dina is asking, is the yield curve the main driver of the market right now? By market, I assume she's talking about equities. And this is something that we talked about a lot in the past. The 9-year run in equities since 2009 had been, okay, initially it was after the global financial crisis, after the big crash. So economies were recovering, all major economies were recovering at a decent pace. So nothing stellar, but they were recovering. So there was a big rally. But the last, 3 years or so, the equity rally has been fueled by the continuation of cheap money, of zero interest rates, QE, companies issuing debt to buy back stocks, which is not healthy. It's not healthy at all, that this way of moving stock prices higher. But obviously, when a board of directors gets paid by the annual performance, you have a big incentive to do that. So they will, even Apple issued a bond. They're flush with cash. They issued a long-term bond and they did buybacks. So when you see that, it's very worrying. And now that yields are starting to go higher, some of this move has to reverse, and I think it will reverse. Now, how much lower will it go? I don't know, but I think it will be a natural and healthy reversal of this crazy slow melt up that we've seen the last 2 or 3 years. So yes, Dean, I think rates are playing a big role in this in equity markets in particular, and I think if 10-year treasuries break above, they're just about to break this huge channel. Actually, let's have a look at that. If they break above, and if 10-year goes to say 3%, then I think it's all over. The yields are going to keep going higher. Oh, what is this? The trading view has something obviously wrong. Look at this, 60% 10-year treasury. Yeah, I don't think that ever happened.
Buy it.
But yeah, you can still see the channel we're right there, which is kind of breaking it, but not quite yet. So if that happens, I think we're going to see a good reversal in stocks. How big, I don't know, but I think it's easy to say that we could get to the bottom end, like the S&P. You could get to the bottom end of this channel. Why not? It's still going to be within this ascending channel. 2200, 2300. I think there's a very good chance of doing that, which is another 10, 15% from here. So the total drop from the top would have been something like 25%, which it's fair enough, and it only takes you back 2 years, where equities were 2 years ago. It's not a huge problem. The interesting thing is that as soon as we see a meaningful down day in stocks, the mainstream media, everybody's like panicking. Oh, collapse in stocks. Well, look at the long term. Where are we now compared to a few years ago? We're still way above. So a nice correction would be welcome, in my opinion. Right. What else can we? Our friend Abdul is asking for sterling Aussie. Let's have a look at sterling Aussie. Obviously, my analysis is very different to what Steve does, because of the way I look at instruments, my timeline, my whole attitude.
Well, it's good to get a telescopic view for people, because most people are much more micro. So you're more of a daily, weekly guy than a 4-hour, 1-hour guy.
Yeah, I don't think I've ever looked at a 4-hour chart this year. So sterling Aussie.
One day we'll drink some ouzo and trade off a tick chart, a 1-minute chart. See how we do.
Done. done apart from the Uzo, which I don't like. I know I'm weird. So sterling Aussie, this is I drew this some time ago. It's obviously moved since then, but look, you know, I drew these lines. It's kind of followed, and we're now on this zone. Plus, we have the 200 weekly moving average, which is right on the level here. So my view, I am still bullish sterling for sure, but at these levels here, we might start to see a little bit of a reaction lower. So maybe, you know, something like that. Now, where would it go? You know, it could reach back to these highs here. Yeah, it could do that. I still think it's going higher, something like that.
Nice look.
But these are weekly charts, so these are things that take ages to form, and you know, this timeline is probably much too long for most people listening here. But it's hold on, let me switch off the phone.
Someone asked why a U.S. dollar yen is weakening. Do you have a view on that, Stel? You know, I just think it was, you know, a little bit of too many people got bearish U.S. dollar yen, and you know, it's an attempt to keep risk going. But to me, it's still in the context of a bear market rally, whether it peaks at 108 or 109. I still think big lows, well under par, is what I'm looking for down the road.
Yeah, absolutely. I think.
What's your chart look like on that? Oh, there it is. Okay.
There it is. Yeah, I mean, we've actually touched the this is a monthly chart, so it's 200 monthly moving average, which we just touched and bounced from. I personally think that this is, like you said, this is a temporary bounce in the yen. Hold on a second. Why is my phone ringing again? Sorry. Actually, can you take over just for 2 minutes, okay, Dale? Sorry, pardon me for 2 minutes.
Sure, I got it, Stel. All right, I'm going to grab the screen. Guys, give me a second. And I do believe Greg is. Oh, there's Grega. So, Greg, if you're ready, let me ask you this: would you rather do an interview format, or you just want to go over what you're seeing? I'm going to make you the presenter. Well, Stelios is
right. I'm back. Sorry, I'm back.
Okay. Well, Greg is here, and I'm going to make him the presenter.
Okay. Thank you, and sorry about that, everybody.
That's okay. Good analysis, Stel. Good job.
No problem.
Steve will be so proud of you. Hi, Grega.
How are you?
Good, buddy. How about you? You have a good weekend?
Sure. It was sunny. Finally.
Okay. Yeah. All right. So it's springtime there in Slovakia.
Yes.
Starting
to
warm up a little bit.
Yeah. It was about it's a very long winter. So.
Okay. Well, thanks for coming in to, you know, step up with Steve down. It's your choice, Greg, of whether you just want to, you know, do what you usually do. But if you'd like, we could, you know, record the rest of the show in kind of an interview format. It's completely up to you.
Yeah, sure. Look, if you have any questions, of course, I'm here to answer. Maybe we can cover some these long-term charts on housing starts that I shared on Twitter and Skype this weekend.
Okay, yeah, that's some beautiful stuff. So why don't we do it kind of this way in an interview format? So I'm going to pretend you just came into the room. Hi, everybody. Greg Horvat. His reputation precedes him coming into our room. I know a lot of you people that are subscribing to ForexAnalytix notice that I bring up his wave counts a lot, and I look for compliments from what I'm seeing from Greg. I love his work. I interviewed Greg, I don't know, probably about 3 years ago when he won an award, and he's repeated that, repeated award winner on FX Street. So Greg, I know you have some things to talk about long term, but you know what? I bet a lot of people would be interested in the beginnings of your journey. We know where you are now. What was it like for you at the beginning?
I started trading Forex when I was around 19, 20 years old, and
wow.
I really fell into it, or I just loved the markets as soon as I heard for the first time for the Elliott wave theory. It was in the first 2 years probably. So at the start, when I was interested in the markets, immediately through Todd Gordon, I got familiar with Elliott wave principle, and I just love it. So
yeah,
it was
Todd's a very talented e-waver. Do you know if Todd really got his background like a lot of people, and I'm, you know, a lot of people that I interview, Greg, say, you know, even though they've developed their own style of e-waves and they see things differently than other e-wavers, most of them cut their teeth on Prechter's book. Did you ever go back and look at what Prechter did, or was the beginning really Todd?
Actually, I was inspired by Todd. Okay, but then I just watched his analysis. What is Elliott wave at the start? I just didn't know what are these ABCs, and then through his commentary, I of course realized it's Elliott wave theory, and then I googled it, and I immediately ordered 15 books, I think, from Elliott wave International website, and I just went through a lot of charts, a lot of work from Prechter. So actually I was really into it very deeply. So because I had an interest. So I'm not really sure if I would be in the market so deeply if there would not be Elliott wave theory. I'm just really, it's really...
It harmonized with your nature, right? And I don't know, were you always interested in geometry or math before this, and kind of how the universe works? And you know, it was one of those great accidents that happened?
Yes, maybe, probably. I loved math very, very much in school, so maybe it has something to do with this as well. And I just love statistics. I love analysis, not just only trading, because as you know, trading, it's maybe 10% of the time, 90% of the time you will just track markets, or maybe even more, or analyze them before you.
You know what? Most people don't know that ratio, Greg. You know, I bet most people have it reversed at 90-10. So, you know, that's a pearl right here, is that, you know, you get paid to wait, and people think they're missing out by waiting, but what they're really doing is preparing themselves for more of a high probability outcome. Do you agree?
Yes. Well, a lot of people, a lot of traders are waiting to pull a trader, but to put a trigger on, but they're just waiting. During this time, I don't wait. I just analyze. I don't know when I will take a next trade. I just analyze, and through analysis, I figure out, okay, this can be my trade. This is not my trade. This is not my time. You know. So it's whole context of a process or of a trading approach probably. And if I don't analyze, I don't know what to trade actually. So analyze on the first place, it makes sense, you know. So
yeah, you know, another pearl I got from you, and you know, I haven't heard it from too many traders, is you always know where you're wrong, but you're wide open, even though you have targets, to your targets being exceeded, and so you never cap the positive side of the trade, because even though you have a wave count, it could turn into something more significant. Is that correct?
Yes, I found this useful a lot of time in the past actually. For example, if I'm trading or want to catch a fifth wave up, and for a fifth wave based on fifth projection levels, you would probably set up your limit target, right? But there's always a chance that fifth wave will get extended, and maybe in the week or 2 or 3 weeks you will actually realize that this was not a fifth wave, it was a wave 3. Okay, so Elliott wave is actually based on statistics, what or probabilities, what is likely to happen next. But there's always the other side of the coin, which means it can happen something unexpected, and markets, as you know, can surprise a lot of times. So actually, if you are in a winning trade, I always also saying this or repeat this to my clients: leave your targets open, but more importantly, make sure to book some profits and and pull your stops tighter. Even if I am in some kind of a with the trade in my target zone for fifth levels of a fifth wave, and I think, okay, market maybe will reverse here, I will still pull my stops very tightly to the upside and will leave market a chance and to trade to be a bigger gainer. So actually, it's not that if I'm right, it's actually it's all about what market is doing, you know. So I'm just following market. It's not the market that is following me.
Beautiful. Yeah, a lot of people would prefer it that the market followed them. I've even tried a magnet on the screen to affect the candle. So you know, one other question that I've always been interested in, and I think it sets e-waivers apart. How do you know, or what makes you decide the difference between your preferred and alternate counts?
It's actually, I will always do my best to label the wave count in the direction of a trade. And I will always try to say myself, if we see a pullback from the highs, don't try to be smart and say that this is going to be a new 5-wave fall. Rather label it as a correction, no matter how far or how high the previous trend went. Okay, so because statistically speaking, there is a greater chance that this was only a temporary pullback and it will go higher rather than a top of a new 5-wave fall that will unfold in the next in the future. So actually, I'm always trying to label my primary counts in the direction of the trade.
Okay, so the trend, and it would be the same in a bear market. You would be doing the opposite.
Yes, of course.
Okay, got it. All right, so I saw that chart you posted on Skype to the team.
Yes,
I know you have some looks that you want to share with the community, and you know, actually, I got a question on Twitter, Greg. Someone was asking, well, you know, the last couple of waves turned down from certain levels, yeah, up around 2,200. Why do you think it's not going to go to 2,200 this time? They were asking me. I just retweeted it. So in case they're watching, buddy, what do you think? What makes you think we're going to terminate here? And it looks like kind of like a 50% correction that we've had in housing starts over this whole big recovery in equities and everything. So that really never fully recaptured the 2007 highs. It looks more like a bounce.
Yes, so actually, I noticed that reply on Twitter, but actually, as you can see, he highlighted that previous readings of housing starts was much higher before this reversal to the downside occurred. But we also have to keep in mind that the previous decline was much deeper than any previous fall. Okay, and what we have to understand that actually this housing bubble caused this financial crisis in 2008, right? So actually, banks, if you will go on a bank, you will not get the loan so easily like you did before 2008. Okay, so this is why housing starts reading is not so powerful to the upside for the last few years. It's higher, but it's not so powerful. Okay, so actually, my thinking is that because you will not get loans so easily, right? Which makes sense because banks have to be more conservative when they give you a loan. So actually, this is the reason why this housing starts is not improving so much. So I don't think that we will see readings like we did back in 1970 and 1985 and 2005. So I think that there's but the key point of this whole cycle analysis was
interest rates.
What I want to say that I'm not saying that housing starts will top out here. What I want to highlight with this chart is that if you want to go into stocks for the next 5-10 years, you will keep an eye on these housing starts data and probably wait on a decline first before you may want to look into the stock market. Because if we take a look at the past readings, after each decline, which lasted from 3 to 6 years on housing starts, then after 3 to 6 years, when this housing starts, bear market stopped, we can see on the right, Dow Jones from each swing low continued straight to the upside, right? So my thinking is that housing starts could continue higher, but if I would want to be in stocks, I will say, okay, I will not go into stocks for the next 5-10 years. I will wait what will happen with the housing starts, and once this market is lower, I will be looking for potential opportunities on stocks, because at the moment we are definitely.
It's kind of a cautionary signal for people that, you know, have their whole net worth and their 401k and stocks and everything, is that you think, exactly. You know, that the housing starts is more of an indication of maybe the market's overpriced, because we had a pretty weak recovery in housing, and if we go back to the lows again, the market could be very vulnerable.
Yes, but you know, this I'm not saying that maybe stocks, even if they extend to the upside, right? It still can take time before any top or reversal will be formed. So it will not happen in a year or so. You know, this can be a very long process before we get this next cycle, and especially it can be very far away before next longer term opportunity in stocks could be seen. So when I'm looking for a longer term opportunities, again, important is that I don't see any opportunities longer term on stocks. So I would rather look maybe at commodities, right? Okay. Commodities are much lower, but there are a lot of investors who are tracking commodity index, but real commodity index is from Thomson Reuters or from Bloomberg.
Not the CRB, not the CRB.
Yes, actually CRB is also okay, but the problem with this is that it contains too much data of crude oil, right? And the crude oil
kind of like the Dixie is too heavily weighted in euro. The CRB is too heavily weighted in oil and maybe not enough in grains or softs.
Yes, exactly. So you have to look at some equally weighted commodity index before you can make conclusion if next commodity cycle or current commodity cycle is lower or it's higher, right? So actually I have this chart here. Actually I have it here on a trading view. Just a second. Equally weighted commodity index. Okay, so this chart, this price data contains equally weighted crude oil, gold, soybean, corn, wheat, coffee, sugar, and different agricultures as well, right? So, technically speaking, what we see here, right, is on the left we had a very strong drop in 2008. Then we had nice recovery, and this recovery, right, from 2009 to 2011 was interestingly very strongly correlated with the stock market. But probably I think it was correlated because they done QE for the first time back then, right? And they probably put a lot of money into different markets. Investors got really excited, but for the next few years, actually, probably QE.
Yeah, that was 1900 gold, Greg, up there.
Yes. So actually.
Why are you laughing?
Yes, because
1900 gold. Yeah, go ahead.
Actually, what I see is that now from 2011 and especially from 2014, when stock market accelerated to the upside, we can see that commodities actually are moving to the downside. They are not following stock market very good, actually, right? So I think that the next longer term opportunity will not be in stocks, okay, because we are probably too high. I think that commodities could be a very interesting place to look, okay? But again, from an Elliott wave perspective, there can be room for more downside here to make completed 5-wave fall in a wave C. I also see this as a potential triangle formation maybe here for a wave 4. So actually,
do you do any, Greg, when you come up with like, is it just coincidence that your C is showing up next year? Do you do any work in time that gives you an idea of when a cycle might begin to bottom out?
Actually, as you know, I made this cycle analysis for stocks as well here, which suggests
okay.
then.
So you tie in cycle work with your Elliott stuff.
Yes, I try to make a combination and a different correlation into one context from different markets, right? So I see room for stocks maybe for another 3 or 4 years, 2021, maybe 2022. If someone is interested to see more detailed analysis on this, I think we discussed with Steve on Friday or Thursday, I don't know, so they can check recording. So actually, I see room for more upside here on stocks, which is matching perfectly with another leg down here, which is missing on commodities. Okay, so for the next 2 years, 3 years, maybe we get another leg down. And actually, as you know, I'm also expecting another leg up on dollar index, which is again makes perfect sense. If commodities are moving to the downside, then dollar could get actually stronger, right? So for the longer term speaking, I think that commodities, maybe even if my wave count is wrong, I think that the next cycle could be actually to the upside in the next 5 to 10 years. So I think there are here much better opportunities here rather than on stocks.
Okay. Well, your telescopic view is even is from the Hubble telescope. Stelios was using his little binoculars from Greece, and you're using the Hubble here. So, okay, yeah, continue. So there you go.
Yes, and actually, I have here this chart of wheat, right? Notice that here, 1970s, this was a stock market top, okay? And then after stock market top, we have seen a move, extremely sharp move to the upside on wheat. Here was in 1980s, around there was a stock market low. As you know, market then broke to the upside very sharply, and actually wheat,
82. 82, I remember, I think the Dow was 600, and then it finally broke out over 1,000. That's how old I am.
And you can see the wheat actually was trading down since then. So actually, there was plenty of time, similar correlation. And actually in 2018, now we can see, as you know, in January, stocks were trading at the highs, and look where wheat is, right? And this is just one commodity. So the next cycle, 5 to 10 years, I believe, will be to the upside on these commodities. And also, it's very similar picture here on corn. We are also trading at the lows, not anywhere near the highs. Okay? So
well, the Chinese, Greg, have seen your charts because they're big stockpilers of wheat now, huge.
Okay.
So they're preparing for the next cycle. They're, Chinese thinking's a lot more longer term. They think in terms of 50, 100 years instead of 6 months or the next election.
Yes, actually, if any listeners now of this webinar are interested in these longer term charts, they can find them. Just let me give you a link here. Macrotrends.net. If you will maybe share on chat, Dale.
Okay, yeah, that's okay.
So actually, they can you can find here data since 1929 or even more. So I think it's a very useful data, especially because for longer term investment, you need to have more information as possible. So going longer or going more back in time, it can be really more helpful, I guess. So macrotrends.net, if anyone is interested.
Very nice of you to give them credit. Okay. They got it.
Okay, so actually here is soybean, also similar situation. Stock market fell here after 1972, around there. We have seen a strong break to the upside on soybean. Stock market crashed here in 1987, I think. We have seen then move to the upside, strong rise on soybean, similar thing in 2000. Then here you can see positive correlation with stocks. This is probably an exception, probably because of QE, I believe. And now, more importantly, in 2018, stock market is at a high, soybean is trading at these potential lower levels, from where I think we could see a next important 5 to 10 year cycle to the upside.
Are the grains your best representative of, correlated moves with the stock market, or are there other groups like energy and metals?
Energy, metals are can act very differently. Crude oil as well. If you take a look at crude oil, you will see now we are in sharp rise, but those grains are not, right? So crude oil, I think, has a more stronger correlation with stocks because of economy as a whole, probably.
Okay. How about and what precious metals to the dollar?
I think that precious metals could also be very interesting opportunities longer term, but still I think that there is more room for more weakness, maybe in line with this commodity index that I showed you.
It's early next year. Yeah.
Yes, actually, if I go to gold chart, you will actually see that technically it's also not bullish. Just a second.
It wants to remain a mystery. There we go.
Okay, so here's weekly. So actually, you can see here that we are rising, but are not rising any strong here. Actually, bullish legs are looking quick. So I think that sooner or later resistance can be seen, and we'll see another leg to the downside. And again, with this is matching quite nicely with this commodity index, and also maybe with stocks where I actually expect push to the upside, back to new all-time highs for the next few years. As I said, cycle analysis suggests that we will be looking for trading higher for till 2022 maybe, right? So during this time, until then, we could see gold moving to the downside still. So actually, I would be really careful with metals here. I would probably wait much lower levels for longer term opportunities.
Yeah,
same thing.
The super people, Grega, that are also do Elliott. Some are looking for 4,200 in the S&P before it tops. Do you have those kind of numbers for the S&P?
For the S&P,
this correction ends. Okay.
So actually, yes, I'm looking for this correction to make a new swing low here, to clear some important orders, probably below February levels, and then I will be looking for new leg to the upside. Right. Actually, I think I have these longer term charts here.
Yeah, you've shown it accelerating through the channel, through the bullish channel, which made it. You had an Elliott channel on it, I remember, and during the blow off, we accelerated through it.
On S&P.
Yeah, you know how you said, yeah, there, some kind of throw over. Okay, so now it's back inside of it. It was. Yeah, there you go. It's right at it.
Yes, actually, it's around there. And
nice.
And since fifth waves are extended a lot of times on stocks, especially if you check back the charts for history, you will notice that fifth waves are extended, and I will really not be surprised if we see another push to a new high here for an extended fifth wave. Even if I'm tracking fifth wave, you still need to have 5 subwaves within this wave 5 before we may say that probably market is turning. So based on different indexes, I think that there is room for more upside. But as I said, again, we are in a very late stage here, I believe, and risk is very huge if you want to invest longer term.
Okay, so you want to wrap it with a couple of shorter term looks. Last week when you were on, you were looking for the potential of some kind of peak in the guppy, I recall, and we are making new highs here. So
actually,
go ahead.
I want to cover euro dollar.
Okay.
Euro dollar in combination with the dollar CAD and crude oil, and then I will go to euro CAD, right?
Okay.
So firstly, euro dollar, we are turning from the lower side of range. I highlighted this a lot last week on Twitter. So market was actually trading to the downside. It was very slow and probably formed an ending diagonal here, right? And after worse than expected non-farm payroll support, we are turning to the upside. So now there is a chance that we will go to the upper side of the trading range. But since I'm looking for a triangle, I'm not sure if I want to take any trades within this corrective phase, because moves can be very choppy, slow, so it can be tricky price action, which I believe you don't want to be involved in with trades, right? So rather on euro dollar, maybe you should look for some other euro pairs. I'm looking for euro CAD. Why? Because crude oil actually recently came lower after a spike to a new high here, right? And we are turning to the downside. So my thinking is that crude oil is actually trapped in a consolidation here, probably in a triangle, and we see room for more weakness to make lower prices within wave C, because each leg in a triangle must be made by 3 waves. So I'm expecting more weakness on crude oil, which means that CAD could be very weak, right? And also I see dollar CAD that made only 3 waves so far, only 3 waves from the highs, right? A, B, and C. So my thinking is that we could actually, based on potential lower prices on crude oil, we could see it turn to the upside on dollar CAD. And if the euro dollar is also on the way to the upper side of the trading range, then maybe euro CAD is going to see a bounce. So
yeah, the CAD could be the jet fuel of the long euro trade.
Exactly. So actually, after I saw this structure and developments on these major pairs or markets, then I said myself, okay, EuroCAD should then be a very interesting pair for more upside. So actually, what I noticed is that market made a very nice deep pullback, and it made with 3 waves. It also retraced perfectly to 38.2% compared to previous extended 5-wave movement. That represents
nice confluence.
Yes, and also notice that wave 4 of the same degree. I'll also notice and found this useful a lot of times, that wave 4 of the same degree made similar distance in length or in pips compared to the wave 2 of the same degree. Okay, so I took this distance of wave 2, which was 570 pips, and you can see here wave 4 also the same pullback. And now we are already turning up from this very nice, interesting zone, and I'm just wondering what will happen now. We have some CAD data coming out in 12 minutes, actually. So I will watch out how market will respond, how today price action will unfold through the US session, and then if it will stay strong or maybe even higher, I will probably pull a trigger on a pullback against the lows of potential for bottom here.
Nice current example, buddy.
Yes, actually, it's a combination of everything what is going on through different assets. Actually, I'm not just looking at EuroCAD, right? Like many traders do. I want to look at correlations, what other markets are doing. This is the analysis that I talked about, that we talked about earlier, right? So I was looking at the markets, I analyzed them, and after hour and a half, when I watched this, I said to myself, okay, this can be a new trading setup, right?
Yeah, the light bulb goes off after you do all that work. It's kind of like having a jigsaw puzzle, isn't it, Grega? Where you see one piece and then this fits and then that fits and the whole puzzle comes together.
Yes, actually, you don't know what will come out from this, right? When you're tracking markets, but the most important is that you don't push yourself to trading. This is probably the most important. Don't just look at the charts. Okay, I need to trade something today. I need to trade.
No,
but
make the charts push you to trade to where it's just so compelling that you would rather try it, and even if you're wrong, lose money than take the opportunity loss of being too fearful to see it after you've been patient waiting for it.
Yes, and also you will not be stressed so much if you will trade this way. So firstly, you focus and just observe the markets, what are doing, and then when you came to conclusion, what can be happening, then this should be a green light for potential trigger. Another opposite.
What a great interview, Grega. I'm glad we did it this way today.
Yeah, thank you. Me too, actually.
Do you have anything else you wanted to share, or maybe you know, show your website where people could follow you? I know they could follow your work here too. And guys, you can follow Greg on Twitter at Grega Horvat, and I'm sure most of our audience is aware of your work, but if you want to show your website, now's a good time to do it.
Yes, actually, as you know, we are covering similar markets like I do on the FA. The only difference is that if our clients who are fully Elliott wave oriented, right, and want also intraday look and Elliott wave chart, Elliott wave community, we have a chat room as well. So maybe that's the better place if they love harmonics, if like they like combination Elliott wave with macro, with candlesticks, with Blake's approach, for example, then maybe FA is better choice. So it's actually it's their decision.
Plus, FA has a chat room. You don't have any live room type of situation there, do you?
We have a live room for clients, yes.
Oh, okay.
Discussing about.
So if you're pure Elliott, you're not going to find a better guy, in my opinion. So, Grega, thank you very much for coming today, and I appreciate your work. I respect it, and glad to be on your team. But I'd rather have you as a friend than as an adversary. And you're my trading warrior brother.
Thank you, man. Thank you.
Okay, buddy.
Thank you for having me today for the interview.
Okay. Everyone, that's Grega Horvat. And you got to learn about his beginnings and some real macro looks and something that you'll probably be able to take advantage of in 12 minutes. So I want to thank everyone for their attention today. Thank you, Stelio. Steve Volge will be back tomorrow for Turnaround Tuesday. Everyone have a great day, okay? And remember, don't just count your pips. You got to count your blessings. Amen. See you tomorrow. You're welcome. You're welcome, Tom.